Hey, good afternoon, everybody. We're going to go over our Forex trades for today, Thursday, January 7th. Another crazy day led by China as they devalued their currency even more. In the month of December, they spent $108 billion trying to defend their currency, and it's not working. That number, by the way, is more than four times what analysts expected China to use as far as their foreign currency reserve in defending their currency, and it's only gotten worse. Right here we are, January 7th, and the Chinese yuan alone last night alone went down about 0.5%. Their equity markets were down 7% within the first half an hour of trading when their markets opened last night, and was halted. That's their limit down is 7% for the day. So they were halted within a half an hour, and it hit our markets this morning. Dollar was rallying, euro was rallying. Dollar was rallying against most pairs. It was selling off against the yen. And then China announced that they are going to suspend their trading halt at 7%. They didn't say that they're going to adjust it to 20% or 10% or whatever. They just said that they're going to suspend it. So tonight's action, when their market opens tomorrow morning here in the States tonight, should be interesting to see what happens. But with that, we had a little bit of a turnaround in the dollar, in the euro. They started to sell off. The dollar against the yen started to rally. But with all this chaos, it's impossible to do, just pure scalp trades that we like to do. We did have one sort of a swing trade that we had 20% of our normal size in this euro New Zealand dollar, as you see here. We picked up some pips on that. First, just want to touch base, economic news. I mean, the China is the big thing here. The economic news today wasn't a whole lot. You have the initial jobless claims, which is a weekly number. Came out pretty much in line, so not too much there. Let's see. I think that was really the only economic news. You had one of the Fed guys speaking. He says he prefers to see higher oil prices. I mean, I guess he forgot all about economics 101. And I understand they're trying to say that oil's going down because there's less demand for it, which is absolute horse. You know what? Demand for oil hasn't budged. I mean, it's still up at very high levels. It's a supply. There's a lot of oil. They're bringing it on, but not only the supply started happening. It's you have the currency, you have the traders, the oil traders in the pits, and big money hedge funds that are trading oil, and they're trading oil like we trade currencies, based off of charts and breakdowns and breakouts and whatnot. And these guys that swing around big money, they can influence. So maybe oil shouldn't be. It went under $33 a barrel at one point last night. I don't know what it is right now, but maybe it shouldn't be that low. But you get these big guys on one side of a trade, they're gonna make it move. So maybe the proper price for oil is $70, $80. I don't know, but it doesn't matter what it should be when you have big money guys throwing around, oil. I, for one, believe that they shouldn't be trading oil, especially oil. I mean, you could make the case for copper and gold. Really, maybe not that gold so much, but anything that we basically use and consume on a daily basis. So you're talking, oil, huge, right? You could make the case for obviously wheat, corn. You get these guys that start trading and they have they're not using the commodity for their business. They're completely out of it. It's just for capital gain purposes. You can make a case that maybe the world should look into that thinking. And I know it doesn't sound right because I believe in capitalism, but oil probably shouldn't have went as high as it went. I probably shouldn't have been paying $4 a gallon of gasoline. Maybe I shouldn't be paying $2 now. Maybe there could be something else set. You got guys swinging wheat, you got guys swinging corn, egg prices, milk prices, and they're going to go to extreme levels on both sides of the coin. So, I don't know. Right now, I think we're benefiting from oil, from the guys throwing, hammering oil down so low. But that's neither here nor there. What else happened here? Was going back to China. You almost have to ask yourself, is someone trying to break the Bank of China? And you throw that around, and people say, "Oh, Bank of China is so big." Well, you know what? When George Soros broke the Bank of England, when no one knew he was doing it when he was doing it. Obviously, everyone found out afterwards. But he's literally the guy that broke the Bank of England back in the late '80s, early '90s. I guess it was late '80s. And if you had thought that and said, "Oh, maybe someone's trying to break the Bank of England," you say, "Oh, Bank of England's so big, right? They got all this money." Well, if you get one guy with a lot of capital that can start to influence, and then he knows all his buddies, and they all jump on that trade, and then you get other guys that don't know them, right? They start jumping on a trade, and then it trickles all the way down to a small retail guy jumping on that trade. You got basically the whole world jumping on the trade, right? So I don't care how much money the Bank of China has, the world's larger. So who knows? I mean, it's just a theory, it's just a speculation. It very well could be. It could be someone trying to do something to the Bank of China that really hurt their currency and slow down their economy even more. Or it could just be a direct effect of the economy in China is just weaker than everyone thinks, and maybe word's starting to get out, and you got the guys jumping on it and hammering down the Chinese yuan. Really? Odds of a Fed hike in the April meeting are all the way down to 42% chance. The March meeting is in a 37 or 36% chance. Chicago PMI came out lower than estimates, worse than expected. The last thing I wanted to point out, Bank of America, they came out this morning and they said watch for negative news out of the U.S. housing market, which could likely stop the Fed dead in their tracks from raising rates. And we've been saying it all along. If you've been listening to these broadcasts over the past year or so, housing market, we've been so negative on it, and it's all now coming to fruition. Housing's really getting beat up, obviously in different markets worse than others. But I think it's just the beginning of it. It's just starting. So Bank of America now here's Bank of America saying, watch it. So sort of like Bank of America starting to think how we think. So it'll be interesting to see what happens to housing. Tomorrow's non-farm payroll, really big number. So we'll see what that produces. That's been trending pretty well, actually, out of all the economic data. That's probably the only one that's been trending pretty well. So we'll see what that gives us. As far as the trade was a short in euro, New Zealand dollar, we were short. Got hit last night while we were not in the office, 1.63835. Came in the office. It was against us about 40 pips or so. When it started to come in, we figured let's just cover 1.63601. Picked up 23.4 pips, or size adjusted 4.6, as we had 20% of our normal size. And it came down all the way down. After we covered, it came all the way down to 1.6336, 37 area. So we left quite a few pips on the table there. Let's call it not quite 30. Let's call it 25 pips, 24 pips. But then this big spike down that you see here, that is the announcement that China is suspending their limit down day, or their halts for the day. So I don't know if they said what the number is going to be, or if they're going to reinstitute at a certain level, or what they're doing. They just said they're suspending it. That was the big news that drove this big red candle here, and it traded all the way down to 1.6286. So in theory, we left about 80 pips, 75, 80 pips on the table. Who knew that news was coming, though, right? So, the other way of looking at it is we probably should have stayed in it for more than 23 pips. Originally our target was right around the figure of 1.63, where it went to. But with all that news and all the uncertainty from China, it's very difficult to trade. So you're in a money, you might as well take it and run. We really can't scalp, so we're getting limited a little bit by our with our strategy because of what's going on in China, and it's really for our choosing, because to us they're just creating more volatility than we're used to having. We want volatility, but we want extreme volatility. So you're not going to get hurt, and not when you're not in a trade. That much we know. And we could have been trying to scalp, and that news comes out, that China is suspending their their limit down, boom, and you're in a scalp, you're going to get stopped out real quick and may even lose more than you wanted to because the market might move so fast. So to us, it's not worth it. So we'll continue to grind it out and see what happens here. Obviously, this news from China is not going to be every day. It's only been, it's been a few days of January. So that's it. So we're going to wrap it up. So if you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action tonight or tomorrow morning. Have a great rest of your day.